Dinshaw Irani joins us. Let's say hello to him. Banks have made a comeback, but you're not the only one who's saying it, so you don't get any brownie points for it. Everyone is saying banks. But IT has gone down. You were long IT at some point in time. Are you still
Yes.
sticking to long IT?
No, actually, you asked us that because we became negative IT sometime in Feb. We were long IT from July of last year onwards. We were fairly bullish, but sometime in Feb we realized that two things actually. One was obviously the uncertainty going on in the US. I mean, already most of the IT guys are calling out that discretionary spends are not picking up at all out there. That's obvious because the way the new admin is creating so much of uncertainty, businesses obviously will hold back. They will not be spending too much. So that was one big concern. The second one, which we always thought was going to assist IT in a big way, was AI. But along the way, we realized that AI is artificial intelligence, that is becoming a disruptor for that particular space. In fact, the model that we always followed is throwing bodies at the work may not in the IT that is space may not be working out. So as a result, we I think sometime in Feb we got rid of all our IT stocks. We just have one which is actually classified as IT, but it's more to do with the auto space. So that's why we're holding on to that one. And when we did that, we raised a lot of cash along the way because we were like at the end of the month we were at 20% cash, but fortunately, the call on IT went well and markets kept collapsing. So we waited. By March beginning, we started deploying the cash again, and I think we've been happier that way. I mean, IT has gone down and the market's gone up, and whatever we deployed, I think that trade has worked perfectly for us. So today, I don't think we have any cash lying with us.
Uh, Dinshaw, there are a lot of other small pockets which are now coming to forefront. Consumer durables. It touches everyone's life, but consumer durable companies in India are not very large. You have this entire two-wheeler space which is making a comeback. You got consumer discretionary stocks which are making a comeback. Anything which looks appealing to you, which in a sense was not the great trade of last 3 years, but could be a great trade for next 3 years.
So, Nikunj, actually, in the consumer durable space, unfortunately, it's the way the liquidity had been sucked out of the system. I think that affected consumer durables to a greater extent. I mean, if you see the unsecured lending had gone down by banks, and with the new governor coming in, obviously that space is looking far better because the first thing that the new governor did was infuse liquidity in the system, and that helps in a way. But I don't see that picking up in a big way, anyways. I think it's gonna be a steady pace. Unfortunately, in India, consumer durables are mostly limited to AC companies and a few pockets here and there. But I mean, I don't see even that space doing too well, given that despite the fact that there's enough heat, I mean, as in the season's pretty hot, there's a lot of sales happening, but the competition is eating into that space. So I don't see that space picking up in a big way. We'll be anything that is underperformed last year and is expected to do well, which you will not give me brownie points for, is obviously the financial space. I think banks are the only space that we feel are looking pretty ripe for a good run henceforth from here on as such. Obviously, NBFCs within those will look far better because I mean, when we're talking about the lender space, because if interest rates are getting cut, that's the area that those are the guys who really benefit going forward. So that way.
So, Dinshaw, we've had no returns in the market this year. When we'll close this year, will we have positive returns? See, no return is also a great outcome from negative returns, right? But are we in for a positive run now till end of the year?
So you're talking about the calendar year or the fiscal year?
अरे भाई दोनों की बात कर लेते हैं.
Okay, so
3 महीने में
fiscal I
क्या
don't
फर्क
see.
पड़ता है?
No, no, no. Fiscal and calendar is two different things, right? So anyway, fiscal, I don't see much of a run happening from here. I mean, whatever we've seen the markets doing, I think they've done fairly well. Given that it's after collapsing, they give you a flattish return in that way. But going into the year as such, I mean, if you look at the CY returns, calendar year returns from Jan to December, I think the markets will do. first half will not be that much of a half, anything to write home about. But going into the second half of the year, if things work out the way they do, if the tariff wars just fizzle out. I mean, I'm sure the Trump administration also is aware that it's going to harm them more than it's going to harm the competition as such. So I'm sure they'll be very selective in that space. And if that happens, I think the things will look far better from going forward from June onwards. And why I'm saying June onwards is, Nikhil, is because June was when the real slowdown hit us. I mean, as in, if you look at the earnings growth, it was in the June quarter, it was a very low single digit kind of earning growth, and in September it was a negative earning growth. December again was a very low. I mean, it was low single digits. In fact, close to 1% that the earnings growth. So the base becomes much more exciting for the earnings to start picking up, and that's what I think all investors look for, earnings growth. I mean, you already re-rated, right? After that massive re-rating that one saw till September, we were massively de-rated again by end of Feb as such, because the world rallied and we didn't. In fact, this was the first time when India fell in isolation of the world as such. And I think that needs to turn somewhere. And my feel is from June onwards, when things start looking pretty good, that is when you'll see flows from FIIs coming back, domestic investors coming back in a rush and stuff like that. So party time from probably June onwards and nothing before.
Right. Mr. Irani, I wanted to get your view or a sense on exactly what's happening when you talk about the SIP picture, given the fact that over the last few months, we've seen a slight decline in the SIPs. Their redemptions have gone higher. What's your view? What's the sense are you getting? You think the confidence is coming back in the markets?
Actually, Cheryl, that is what was very disappointing, because I think SIP is one route that the investor should be tinkering with, because all along the whole idea of an SIP is that you need to average on both sides of the market, right? You need to average on the way up and on the way down itself. That's when, and frankly, I mean, when you're averaging on the way down, that is when your IRRs really shoot up. That is when your returns really look exciting on a longer term basis. So that was the disappointing part, that most of the SIPs stopped at the bottom of the market, and probably they'll come back given the way the markets are. But as I said, the markets will remain choppy. And frankly, I mean, our feel is this is the way forward for all retail investors. I mean, if you're looking at savings, this is one portion that you should be tinkering with. And one thing that I would like to highlight out here are the distributor which are assisting their investors. I think they did a phenomenal job, because bulk of the shutdowns that we saw in the SIP space were more of direct investors, and the ones which came through the distributors, they were handheld, I think, by them, and very limited amount of shutdowns there. So I think they've done a phenomenal job going forward. So hope that works out.
If you like this video, then like, share and subscribe to ET Now.